Why would anybody want to save money and purchase using cash when credit is so simple to obtain? When you desire something, you reach for your plastic and pay for it over an arbitrary period of time. Everyone makes monthly payments if they can. What's the big deal? Unfortunately, a lot of individuals these days find this kind of thinking to make sense. Here are 7 good reasons to save money. Before starting, don't forget to like and subscribe to our channel for more future updates. So let's start. Number 1. Become financially independent. Depending on whom you ask, various people have varied definitions of wealth. However, having financial security and reserves that can be relied on is the only thing that most people associate with being rich or affluent. Financial independence is being able to make decisions for yourself apart from those that are related to receiving a paycheck. This could entail taking vacations whenever you want, quitting your job and returning to school to pursue a different career, starting your own business or investing in someone else's startup, lending a helping hand to family members, accepting a lower paying position that is more personally fulfilling than financially rewarding, or a popular choice these days, retiring when you want to instead of working because you have to. Although achieving financial independence does not equate to being wealthy, the freedom from being dependent on a regular paycheck may make you feel very wealthy. Regardless of how you define wealthy, having dependable funds is a need. Number 2. Save 50% on everything you buy plus 24% on groceries. If you regularly charge all of your purchases to your credit card and don't pay it off in full each month, you are likely spending at least 50% extra for everything you buy due to additional interest fees. Break your pricey credit habit by saving money in advance for your expenditures if you are dependent on your credit cards to support your way of life. Savings allow you to take the time to choose wiser purchases and buy items while they are on sale. People with funds may also purchase large quantities of food while it is on sale, items that are non-perishable or which can be frozen. According to one expert, those who practice this may be able to forego one grocery store visit each month and cut their annual food spending by 24%. Number 3. Buy a home. You cannot borrow a down payment, and the bank will not offer you money to purchase a home if you don't have one. This money must be either given to you or saved up by you, it cannot be lent to you. The bank will consider financing you the remaining 95% of the buying price of the home if you put down at least 5% of that amount. You will need an extra 5% of the purchase price solely for the additional expenditures and levies that you will incur while purchasing a property. The key to house ownership is saving money. Number 4. Buy a car. In order to get a car loan with a fair interest rate when you want or need to purchase a new vehicle, you will need to make a down payment. Of course, you could borrow the cash from your credit card, but with a 20+% interest rate, how is that going to help you succeed? A vehicle loan will inevitably cost you something, and that amount may be a lot since 0% financing is only available to stellar clients. The ideal course of action is to put up as much of a down payment as you can, after which you should weigh your possibilities. Perhaps the best option for getting the automobile you desire will be to get a reliable used car rather than a brand new one. Number 5. Get out of debt. You must have some money saved if you ever want to get out of debt. It has an ironic ring to it. However, if you keep using the credit cards for every emergency that arises, they will never be paid off. Statistics suggest that even if you are an excellent planner, half of us incur at least one completely unforeseen cost each year, and half of those will be unexpected car trouble. Therefore, you should set aside $500 to $1,000 as a reserve cash before you start making aggressive payments on your credit cards. Then, rather of charging unforeseen expenses to your credit cards, you may pay them off with your reserve cash. You can detect whether your spending is out of control by keeping a reserve fund in place. Click here for further debt relief advice. Number 6. Annual expenses. You need to save money for yearly costs if you want to live a decent, mostly stress-free financial life. Money for presents, vacations, car upkeep, small house repairs, appliance repair, property taxes, and potentially income taxes are some examples of these. While it may be tempting to refinance a home in order to pay off debt or to utilize a line of credit to pay off high-rate credit cards, it is risky to continually charge expenditures on your credit card without ever making a dent in your balance. Saving for these costs in advance is the best approach to handle them. You will have peace of mind and save money by doing this. Click here to find out how to set up a budget for yearly costs. Number 7. Unforeseen expenses. What would you do if your vehicle required significant repairs? Do you have a stash of $500 to $3,000? What if it is found that you are living in a leaky building or that your home needs some repairs? Bank loans for all of these purposes are not usually guaranteed. It is much preferable to prepare for the worst case situation and have some money set aside. Number 8. Emergencies. We all know that crises do happen, despite our best efforts to prevent them. You could need to make an emergency trip, a family member might become sick, you might have a vehicle accident or breakdown, bad weather might flood your basement or damage your pipes, or you might need to fly to a loved one's funeral. We all know that we will probably sometimes have some kind of emergency, and any of these situations may be pricey. So why not plan ahead rather than risk being yet another emergency victim? There is one good reason to save money. Number 9. You could lose your job or get hurt. Everyone believes their work is secure while circumstances are good, but during tough times, many people start to understand that anything may go wrong. You may find yourself unemployed overnight, your firm might fail, you might suffer a bodily or psychological injury, or you might get ill and be unable to work. You might experience any of these things. Employment insurance, A, doesn't start paying benefits until after 6 weeks of being jobless. Are you going to live on credit or do you have enough money to last you? Living on credit in these trying times may easily make things worse. The minimum payments rise steadily until they are unaffordable and the credit limitations are unmovable. Then, when you do eventually get a paycheck, the money that used to support you doesn't anymore since you have so many additional debt payments to make each month. Because you'll need to make payments on these debts and ultimately labor to pay them off, you really need more money today than you had before. Number 10. To have a good life. Living constantly under stress, paycheck to paycheck, has serious emotional, psychological, and bodily repercussions. People who don't make future plans seem to jump from crisis to catastrophe. Uncommon knowledge holds that being organized may make you happier. Being organized can definitely assist, but it won't always make you happy. The act of setting away money to use when necessary is essentially arranging and taking charge of your future and financial matters, since there are so many aspects of your future that are beyond of your control. With savings, you have nothing to lose and just a happy future to gain. This is it for today's video. What do you think of our video? Feel free to share your thoughts in the comment section below. Don't forget to like and subscribe to our channel for more future updates. Thanks for watching.